am Jeny Yeung. I am the Senior Director of Business Development, actually here in BC, so it's actually morning. So good morning to anyone in the Western Territories and good afternoon to anyone on the East. Today I'm going to be talking about planning your retirement with critical illness insurance. Today, my agenda, my topic will be really giving you a quick little update about SSQ, talking about some of the client concerns, perhaps some of the objections and perceptions of really what kind of happens when it comes to, critical illness, and then maybe some ideas to utilize and seize the opportunities of what we can do. And so hopefully by the end of this, it'll give you some food for thought and something you can take away from when it comes to, being able to utilize the critical illness. So as I mentioned, we are SSQ. I am employed by SSQ. We are merging with La Capitale, soon to be Beneva. We were chatting before the webinar started. I feel like we are going through a bit of an identity crisis, and the fact that we are going through a merger, we are going through a brand change and a name change. From now until the end of the year, SSQ will stay SSQ. So as you speak to us, anyone on the SSQ side, everything will stay the same. Come January 2023, we will be Beneva, which will be the new brand, which will make us the largest mutual in Canada. We are the 6th largest insurer in Canada. Not going to go through a huge amount of details when it comes to this particular slide, but just showing you kind of where we stand as Beneva, as the new brand come January. So just to give you a little bit of background of who we were as far as SSQ, who we will be when it comes to Beneva. So that's kind of really the update as far as what's happening to us, because I know there's been a lot of conversations about who are we? Are we still SSQ? Are we going to be Beneva? January 2023 is where Beneva really comes in. SSQ for now until the end of this year will stand. That's our brand. That's our identity until the end of the year. So as Don had mentioned, it is National Critical Illness Month in October. I'm not sure if you guys knew that. Just kind of Googled it quickly just to make sure that, if you want some more information, there's lots of information online in regards to Critical Illness Awareness Month. And that is October of every single year. And so great timing, and the fact that, IDC had the foresight to know that it is October Critical Illness Month. So we're going to talk about that today. And then also things about critical illness and about planning and really about the conversation. The old view of insurance was only needed to replace income for a single, breadwinner. But today we have to look at other things that we need to discuss when it comes to families, financial needs. And critical illness really kind of gives you that financial cushion to focus on your health. So we're going to talk about that and have that conversation throughout over the next 50 minutes. So if you do have any questions, please utilize the Q&A. The reason why I suggest the Q&A specifically is because what happens is on Zoom, we do record the questions. So just in case I am unable to answer, or if there's anything that requires follow-up, we can get a copy of those questions instead of using the chat. So if you do have questions, please feel free to use the Q&A box. They're really great. And so as we move forward, talking about things such as plans, I think everyone always has a plan and a goal of some sort, and everyone here probably has a goal and a plan. My unexpected plan was to travel this year to Asia, which is where I just came back from. And it was a very interesting experience, considering it's the first time I was on a long haul flight in over in 3 years, just obviously due to COVID. So my goal and my plan is to travel again next year, somewhere a long haul again. And then everyone here has a plan of some sort as well, whether it's vacation plans, maybe looking at buying a new home because of the fact that maybe the cost of homes have gone down, but interest rates have gone up. So is that still in the plan? Maybe to buy a new car, save more money to do all of the above, or just save for retirement in general, or just trying to make sure that you don't lose any of the retirement money that you already have, just due to everything happening in the market. So as we go through our life and as we have plans, we do have other things that go through when it comes to the life cycle of what it is that happens in our lives. Throughout our life, we like to buy stuff. That's not a question. I bought a whole bunch of stuff from Asia, had to expand my luggage, had to use extra carry-on bag, almost bought a second bag. So clearly like to buy stuff throughout our lifetime. And then obviously other things have changed in our lifetime. whether, going to school, getting married, opening our own business, expanding our business, having children, looking at retirement. And that's kind of, part of what we're going to talk about today. Kids going to university, maybe legacy, all those kind of things that's going to happen and trigger as we make plans in our lives, as all these other things happen in our life. And then also the other thing that happens is the new definition of family. Perhaps you are still in a traditional family situation. Some of your clients are, but maybe they're in a blended family situation now. Maybe they're a single parent. So as we go through all these plans that we had in life, it kind of changes and shifts as we move forward in life due to whatever it is happening. So as we navigate through making plans, we do have to navigate based on things that are changing. So as we try to figure out and keep our plans in place and be able to obtain that goal, let's find other ways to be able to make sure that that happens. And this is kind of where, again, this presentation, this conversation really comes about. Some of the concerns maybe that comes up with some of your clients is maybe they're worried about a disability or having a disability and what will happen if something were to happen to them in that case. Retirement savings, I think that is definitely probably a concern right now, especially with everything going on. Taking care of the family. I am also licensed. And so just recently I had a conversation with, a friend just talking about how she shifted into the fact that she's now self-employed, looking at making sure she has enough insurance to make sure she takes care of her family. But as we're having the conversation, all these other things have come up. So, your concerns may be initially taking care of the family, but, other things can come up. Maybe job loss, something as well, where now she became self-employed. Is she concerned about that? How are we going to, manage that? So client concerns as far as what is going through their mind and everyday regular stuff. So part of the things that we talk about a lot is people are living longer, people are healthier. I read articles all the time about, what kind of foods to consume, what's good for you, et cetera, et cetera. So, we are living longer. And so that being said, that's really great news. However, there could be a possibility that we may become ill, become sick, where, obviously no one ever plans to do that. So why critical illness insurance is important is because you need the insurance, not because you're going to die, but because you're going to live. So what we want to know is, and what we want to see in keeping things positive is the fact that, as we look at that conversation with critical illness, it's not about the fact that, whatever the probability, whatever the percentage of something's going to happen to you, is ultimately we want to know that you're going to survive like that. I'm not going to spend a huge amount of time on stats because I find that every time, conversation about critical illness comes up, there's always like a whole bunch of statistics about critical illness. But I'm just going to spend, maybe the next minute or so just really talking about why critical illness and how to really start that conversation. Make sure the questions are simple, keeping it simple, and really at the end of the day, comments such as 50% of men or 40% of women will claim by the age of 70. And also, who do you know as far as being, that has suffered or has been impacted by a critical illness? And I think that everyone, hopefully most people on this call may or may not have had situations where they've been directly or maybe indirectly been affected by someone who's been diagnosed with something where, they may have some situations where there could be some financial concerns or whatnot. So statistically speaking, this is kind of what we're looking at as far as who's getting impacted and how that really affects people. And then also, as we look at planning and as we have these conversations about how we're going to look at making sure that whatever plans you have stay in place and you're able to follow through with that, is conversations about GoFundMe. I think that we just had a conversation yesterday with our team about critical illness. And it was really timely, actually, because it was like, oh, it's perfect because I'm just about to talk about critical illness today. And they had said that, there are lots of people who don't look at critical illness. And I think that there's conversations and there's always been stories. And I think everyone here probably has a story, or maybe not, which may be fortunate, is the fact that you've had conversations with your clients. They say no to the critical illness And then all of a sudden, maybe months or years later, that topic comes up again, but it's only because they might have seen a doctor or maybe there's some health concerns and now they want it. And then now they're unable to get it. And then it becomes a situation where now if something were to happen to them, they need to find help elsewhere. And something such as a GoFundMe page has become utilized more often. And then also the other thing is, if you go into a GoFundMe and then you pick a city and pick a disease, you will see how many people have been impacted by situations such as the fact that they haven't planned properly and prepared properly in a situation where they could have easily just picked a situation where we could have that conversation with critical illness and paid. And it doesn't necessarily have to be something that's really exorbitant. So as we talk about this critical illness, why we want to look at it and how we want to start the conversation, I think is really kind of the theme of what we want to talk about. Conversations, and the fact that Don had alluded to in the beginning of the introduction, is the fact that if something ever happened to you, where are you going to go first? So, I'm going to put critical illness here, and then the what if, you suffer through a critical illness, what if something happened to you, where would you get your money from? And like Don alluded, first piece, I think that is kind of the first place you kind of really look at when it comes to where you get your money from. Maybe a TFSA's or savings account. Maybe you have been really good savers. You've been putting money towards your TFSA or into a savings account. Maybe you have some money for a backup and a cushion. Maybe you do follow that rule where you put 5% of your salary away. Perhaps you can utilize that. Absolutely. However, like I mentioned earlier in this presentation, is the fact that, you may not die from it. You're going to survive it. And so if that's the case, you've utilized a lot of your retirement savings and your emergency savings funds. So you have to replenish that at some point. So can you utilize these? Absolutely. Do you want to? Probably not. So if that's the case, let's continue this conversation and see what else we can do. Or maybe you want to look at a situation where you have a life insurance policy. Maybe you have some cash values, whatever you have chosen, whatever product you've chosen with a permanent insurance product that has some cash values in it. Do you want to utilize that? Depending on how long you have that policy for, depending on how much cash value you have, absolutely. You can definitely do that. However, is that something that you really want to do? And at the same time, if something had happened to you, if you were suffering from critical illness, do you want to, risk that situation where taking some of that cash values, maybe being a situation where you end up lapsing your insurance policy? You probably need your insurance policy much more now than you did before, because maybe you become uninsurable, or maybe you've been postponed and you can't get insurance for a while. So can you utilize your cash values? Definitely. Do you want to? Probably not, because of the reasons that I really outlined. What about selling your home? I live in Vancouver. Houses are fairly expensive. Anyone also on the East Coast, Toronto area, very probably within the same market as what's available in Vancouver. Do you want to sell your home? Absolutely. If you are looking at downsizing is really not that much better in the fact that housing prices are gotten quite a bit expensive. And also, I don't know anyone here on this call who has moved. Moving is very stressful. Packing is very stressful. As you're already going through something stressful in your life, do you want to add additional stress to your life? I mean, that's definitely possible and definitely an option. However, let's try not to put yourself in that kind of situation where, you're adding more stress to your life, because I feel as though that no one wants to add more stress into their life. I feel like we want to take less of it and have less of it in our lives. What about borrowing money from the bank? With interest rates being what it is that what you want to do? And not even just that. How would that conversation go if you walked into a bank, spoke to someone and said, well, I'm actually not well right now, currently not working or only working part-time, would like to borrow some money in the fact that, I need to be able to pay my bills, et cetera, et cetera. Would you be able to lend me some money, et cetera? How would that conversation go? I think that, something to think about when we think about things like this. Also, borrowing money from friends and family. And this is kind of where that whole GoFundMe situation kind of really comes in handy. Or do you want to go and have to do a GoFundMe page? I think that every single option that I put on the screen is definitely possible. However, what we want to do is we want to alleviate that conversation where you will have to go through that RSP, that TFSA, being able to borrow from the bank, providing a GoFundMe page. Obviously, when something happens, there are lots of options for you to utilize, which is great. But what we want to do is we want to be able to say, hey, something has happened to you, but you have this in place where you don't have to touch any of these situations and be able to add more stress to your life. So again, conversation piece of what if something were to happen to you, where would you get your money from? And then also let's look at objections. Really at the end of the day, there could be situations such as, people say, well, I have an employee group plan, and that's great. However, I don't know how many people actually know a lot of details about their employee group plan. There probably are, but maybe they don't understand or realize how little that actually gets covered under the critical illness. Life insurance portion is probably okay, but the critical illness portion, maybe not as much as you think. Public health insurance, being Canadian, obviously we have a really good public health insurance. However, it doesn't always cover everything that you want it to do. So as much as, things such as getting tests done, surgery, etc., great. However, there are other things and other expenses that come up that we don't really realize that, you may need to utilize. It being too expensive, I think that's just a perception that really is out there, and the fact that it's too expensive. I think it really will depend on what you want to utilize. And I think that we have enough tools, we have enough options to be able to provide something for the client without actually being too expensive. And I have plenty of savings. I don't know how often that actually really comes out, but if it does, I mean, great on your client. But, I feel as though that doesn't happen that often. And then it won't happen to me. And I think that I kind of understand that too. I remember when I have critical illness insurance. And so I'll explain to you why I got it. But like when I got my critical insurance, I purchased what I could afford at that time. And then I added return of premium, mainly because I had that attitude of what happened to me, where I'm just going to take my ROP. However, I do have CI, but I got the ROP thinking that I'm just going to claim on my ROP more than claiming on my CI. But either way, the whole attitude of what happened to me situation, I think is, definitely an objection that probably gets heard more often than not. And so let's look at maybe finding ways to deal with some of these objections in the fact that, how about that too expensive? I think that whole too expensive thing doesn't necessarily have to be the biggest obstacle that has to happen when it comes to critical illness. Absolutely. When you put a premium beside a life insurance policy, especially if you're looking and having a conversation with term, and then you put a premium for critical illness, I think it's a little bit of sticker shock. However, it doesn't have to be that way. Let's look at Beneva simplified issue critical illness. We have that option. It is something that actually is via our La Capitale, formerly La Capitale, now Beneva brand right now. So it's something that's pretty new for us as far as the SSQ sales team, but it's been in the market for a while. And the really interesting thing, and again, like our team had a conversation about critical illness, is the fact that the premium for this hasn't changed in 12 years. So that being said, you already know the premium is pretty competitive. Anyone who's familiar with critical illness has already seen pricing changes over the last 5, 6, 8, 10 years of what critical illness has been like. Because what happens is you and advisors have done a really great job in having that conversation. So there have been, obviously a bit of more of an uptake as far as when it comes to critical illness. But I think that, there's definitely still more room to be able to utilize and sell and be able to provide that service when it comes to critical illness. So with the conversation of being too expensive, I think a simplified issue could really work. You get options as far as what you can choose: 10,000, 25,000, 50,000, 6 cover conditions, basically the 4 major ones that get talked about a lot in conversation, and then basically 2 additional ones. So we have coma and paralysis that gets added. T10, T75 is your options. And the interesting thing is, like I said, our CI hasn't changed in 12 years. Pricing hasn't changed, which means our definition also hasn't changed. So we are still on the original benchmark definitions that happened way back when, when everyone kind of merged into one kind of benchmark definitions with the carriers. So we are still on that. Premium hasn't changed for 12 years. So from a perspective of being too expensive, really great way to take a look at it. And I would suggest taking a look at sooner than later, because I had mentioned in the beginning of my presentation, we are in the process of a merger, which means that we will be reviewing some of our products. But if this is something that kind of perked your interest when I brought this up, absolutely take a look at it. Reach out to someone in our sales team to discuss it. The other thing is when you calculate the premium, it includes a return of premium. So on depth. So the thing is, when you look at the premium, looking at the cost, it includes an ROPD. If you want to return a premium on cancellation or expiry, you can add that. That'll all be additional premium. But basically what happens is when you look at this, you've got the 6 illnesses. You've got a coverage between 10,000. You can choose 10,000, 25,000, or 50,000. T10, T75, including return of premium at death. You have the option to choose that. And the extra little thing is, which I found very unique and very different in the marketplace, is that within the Beneva contract there's an ROP loan feature on our CI policies, which is very different. I've had conversations about ROP loans often, and people are like, what? Sorry? So, that being said, is very unique and different in the fact that if there is a situation where, you are looking at selling the Beneva CI, there is return of premium values in it. You can borrow against it. And the great thing about something like that is the fact that that is all done within the company. Basically, you just need to utilize that from the perspective of giving us a letter of direction. We already know what the value of the ROP is. So from a perspective of being able to process it, it's a really quick process. So what happens is it's available in all of our CI contracts under Beneva, formerly La Capitale. So whether you're looking at the fully underwritten or a simplified issue, you can exercise it anytime there's an ROP value. You can borrow up to the value of the ROP. If you want to know what the rate of return is at the end of the day, as far as what we charge, it's available on our public website. And as far as, like I said, a processing perspective is that you just have to let us know because we already know the value of it. And then it's basically just a request internally because we don't have to figure out and go through a lending institution, et cetera, et cetera. The other thing I really want to point out is the fact that, we do obviously have some questions that we're going to ask. There's 5 questions in total. And one of the things that we do ask is, 2 or more family members is ultimately under the age of 60 is what we look at when it comes to medical conditions. And then I'm sure everyone here is like, where are the questions? Well, here they are. So here are our questions. And so typically I always use me as an example. I know that you see me on the screen and I'm literally this big, but I'm 5'4" in my natural height glory. And if we just look at the first thing when it comes to build chart, at 5'4", 213 pounds is what we look at. And so that I think is very forgiving. So again, if you see my natural glory of 5'4", 213 is extremely forgiving. And I would say that that's definitely like 1.5 of me at least. And so, when we want to look at simplified issue, it's not necessarily, it's partly due to an expensive option, but it does provide, a decent amount of definitions, 6 definitions, 4 of the major ones. If that is okay with your client, cost-wise, it really kind of makes sense. And then also the other thing is if you're like, well, what's the price? So everything is available on a fillable PDF for us. And I just basically took a snapshot of, again, the questions and really the pricing. So really, if you're looking at something, let's say someone in their 30s, non-smokers, male and females, I mean, our pricing is ranging between $18 to like 30 to 30 some odd dollars, $35. So basically, if you're looking at putting $50,000 worth of coverage for a 30-year-old, whether male or female, but non-smokers, pricing ranging from $18 to $35 whether you want a T10 or T75. So again, a very inexpensive option when we're looking at something and utilizing something like this, because I think that, too expensive shouldn't be enough of an objection, because again, we have enough tools and we have enough options to be able to utilize what we can put in place, what we can do to be able to utilize this. So being able to look at our simplified issue, again, if you haven't had an opportunity to take a look at it, more than happy to have a conversation or contact your local salesperson. They'd be more than happy to discuss this with you, because I think that this can be, I've always liked simplified issue for multiple different reasons, kind of really what I've mentioned, the fact that, being too expensive shouldn't be an obstacle. And I think that being able to introduce something like this is a good conversation piece. And then if it's something where a situation where opening the conversation, the door with simplified issue, but then they realize they want a fully underwritten, that's just, kind of like the cherry on top of the sundae. So again, really being able to start that conversation, showing value as far as what we want to look at. And then the obstacle of having plenty of savings. Again, I've never had any conversation with someone who had said like, I have lots of money and I don't need any more and I don't want to be able to protect it. So if and when or whatever the conversation comes to, we want to be able to look at helping them protect that savings if that is the conversation, whether it's RSPs, whether it's TFSAs, whether it's savings, whatever. So being able to utilize it in that situation is, I put a little case study together of Blake here, 20-year-old, works as a graphic designer in a marketing company. She makes $50,000 a year. She does a $3,000 RSP contribution every single year. She does have some group benefits. Her salary for a group benefit is her group benefit on the life side is 2 times her salary, and she has a small $10,000 CI benefit through her group insurance. So she's meeting with you to discuss how her investments are doing, just because the markets has been a little bit scary. So she wants to have a conversation with you to make sure that everything's going well. So during your meeting, you bring up life insurance and critical illness. So what happens is you suggest that she puts in a T100 CI coverage for $50,000 with a return of premium and cancellation. And what happens is we put a monthly premium together. We've got Blake here. So what we want to do is we want to have that conversation about the life and CI. So what happens is during conversation, you're going to suggest that you're going to put in a T100 for $50,000, because that's kind of how much she makes now. And then it's kind of one of those conversation pieces where, you go through your needs analysis, which is great. And then you figure out what everyone really needs. And then sometimes it becomes a situation where, not everyone's going to be able to afford based on like what kind of base amount we want. And then we do kind of pick amounts that kind of, make sense from a budget perspective. In this case, we decided to pick a $50,000 because that's what she makes as a gross income. I don't think that's an unreasonable kind of situation to choose. We can choose other amounts. Like if you really want, you can choose her net amount. However, because she's 26, more than likely she'll be making higher income at some point. So 50,000, I think, is not unreasonable. And the fact that it's kind of within her budget as well. So in this case, we're looking at a $43 per month or $475 annually. So, and what we're suggesting is, because she's allotted $3,000 in her RSPs, and I think that, we have a piece of the pie, we cut the pieces of the pie into slices. So she sliced out that 3,000 already. Why don't we just not add another slice into the pie, but we're going to just take out a portion of that out of that slice. So we're going to take the $475 out of that 3,000 that she's contributing towards her RSPs. So she's still continuing to put money into her RSPs because that was her plan. Maybe slightly less than she had wanted. However, we still have that plan to continue that savings. And now what happens is now we have a CI in place. So that way we have kind of both situations covered in the fact that, she's already allotted the money. You're not asking for more. She's still being able to put money towards her savings and then having this particular plan in place. So what if was diagnosed with cancer? Years later, something had happened to her. If she got the CI policy, she's able to continue to her RSP contribution, which was that 25-25, because we took out some of the money, save money to buy a house, a car, whatever it is that she had that plan, go on vacation, etc. And then at age 65, her RSP would go to $320,000. So, but if she didn't have a CI plan, she probably would have to stop contributing to her RSPs because she probably would need all the money she can to deal with whatever she's going through. She might be able to, or she might have to take out a withdrawal. Maybe it's $50,000. Then her value of her RSP would only be $185,000 because she took out the money plus she stopped making contributions. So really, at the end of the day, what we really want to look at here is what the difference is in what the cost savings or what is really being impacted by being able to take that extra little bit out of that $3,000 that she's putting towards her RSPs. So at age 65, if she had no CI plan, 185,000 is what we're looking at. But if she were to continue, 320,000 is what she's looking at. It's a difference of about $130,000. Plus, if she decides that she is super healthy, no longer wants a CI plan, at 65, she can't exercise that return of premium. She decides to keep it, continue on at 70, 75, 80. She wants to exercise the return of premium. That dollar amount is going to be even bigger. So looking at where that comes from and the fact that we literally talked about $475. We didn't take any more out of the budget that she's allotted. She'd still be able to put money towards her RSPs. So by protecting that and being able to not stop those contributions, still be able to continue to save, this is kind of part of that idea. And I don't think this is anything new. I think everyone's probably heard this idea of seeing something example or something similar to this. But I think that impact is real. And like I said, everyone has a story. And so I will share my story. This is a picture of my family, my mom, my sister, my niece, and those are my granduncles and my grandaunt. So my grandparents, brothers and sisters. This was a few years ago. We had gone to Peru to celebrate my granduncle's 80th birthday. And so part of this is the fact that my own story is my father actually passed away from cancer some time ago. And so when my parents first came to Canada, the first thing they bought was a life insurance policy, because that's what you do. Everyone understands life insurance. You purchase life insurance policy, something happens to you, you die. Critical illness was not really a thing back then, just because it's been a while. It's been a while since my parents came to Canada. No one really reintroduced that idea when CI first came back into the market. And at the same time, I'm not even sure if my parents would have bought it. I'm not really sure. I was pretty young at that time. And so fast forward years later, my dad actually was diagnosed with cancer. The fortunate part is my parents were really good savers. So they had a lot of money put away. My mom had worked at a company that was unionized, so she was able to take the time off. She didn't lose her job when she took time away to take care of my dad. And so long story short, 5 years of battling cancer, and he didn't survive. Obviously, the life insurance paid out. However, in that 5-year period where my dad was working on and off, and also my mom was working on and off, they utilized their savings, and they had to use a lot of that to be able to fund things such as alternative medication. My mom did everything in her power and every Chinese alternative medicine that she could put her hands on to give to my dad to be able to get through all of this. And this is kind of what I was talking about, the fact that, yes, we have really great healthcare, and, all the surgery and all the tests and all that stuff was obviously taken care of. However, alternative medication, any kind of anything else that was needing to be paid came out of their own pocket. They had to take time off work. My dad didn't work. My mom wasn't working. And so, again, fortunate they were good savers, but obviously depleted a lot of their savings. Luckily, our house was paid off, so my mom didn't have to worry about a mortgage. But I think that the impact of something like this, everyone has a story, whether it's someone that's been affected directly or maybe indirectly, because it's one of those things where, we will know someone who has gone through this. And I would say that even if my parents had a $50,000 CI plan at that time, would have made a difference in the fact that they probably would have had to take less money out of their savings account. Let's just take the fact that whatever the market was doing at that time, that's not even the point. The fact that taking money out of that hard-earned savings they had saved up over the 15, 20 years or whatever it is they've been saving for, really does that impact. Whether we talk about a large amount or a small amount, whether it was 25,000, 15,000, I think all of that would have come into play. So as we have these conversations with our clients, as we look at the impact of what can be done, even situations like if you are going to take that extra step and go into a GoFundMe, figure out how much people are really asking. Ultimately, they just really want to ask for 20,000, 25,000 to be able to cover the expenses, their bills, etc. That's really happening. So whether we think that everyone needs $100,000 or whatever it is of CI, 50,000 changes their lives, 25,000 changes their lives. So whether we're looking at simplified issue or fully underwritten, I think that everyone really, there is, something to be said about amounts that really will make a change and an impact, because again, everyone has a story as far as what gets impacted. So as we look at our options for critical illness through SSQ, we do have multiple different options. We do have a 3 covered condition, 25 covered condition, and a 28 covered condition for children. T10 to a T100 with a 20 pay. So we do have all these different options that are available for you. You can choose a return of premium at death, return of premium expiry or cancellation. So, when it comes to that conversation of being too expensive or like, I don't have enough to pay for this, you have options to choose from. 3 covered conditions, 25 covered conditions, simplified issue with the 6 covered conditions, choosing your face amounts. Again, 25,000, 50,000, what are we looking at? I think that we always have, at least the perception is the fact that there's a certain dollar amount that we need to have. But I think that when you're in that situation, if someone comes to you with a $25,000 check, I think that it will change your lives. Like, I think that if my mom had a check for 25,000, I think that she'd feel a little bit of a relief, as much as it's not enough to pay for probably most of the stuff, but it helped her a little bit to be able to pay for any of that stuff. So again, let's look at their options that are available for you. Return of premium if you choose to. I chose an added return of premium on mine because I just assume I'm going to be a really healthy person and that I won't claim on my CI and I'll just take my return of premium back. And I'm super comfortable with that idea. And so far, so good. Knock on wood. Things have been going good. So looking at that option as well, return of premium on death. These are our 25 covered conditions. SSQ, like Beneva, formerly La Capitale, has not changed our rates in over 6 to 7 years when it comes to our CI. So cost-wise, we should be less expensive when it comes to being able to look at our CI. If you've never looked at our CI, haven't done so in a really long time, please take a look at it. We are the standard 25 illnesses for a benchmark definition. Loss of independence is included within our 25. Definitely something to take a look at. And, cost is part of it, but finding value behind what it is that you want to look at when it comes to something like this as well. We don't have Best Doctors, but we have our version of Best Doctors. It's called Assistant Benefit, but it provides the same services as Best Doctors. I did talk about a juvenile, so our kids' CI plan, permanent insurance only, so that's an option there. And I find that, putting that in place early could be a really great idea as well. Here's our 28 illnesses. Here's some family history tables. We do have a prelim service that's available as well. I'm going to end off by talking about kids specifically. So I'm going to talk a little bit about coverage for children. And I know that the topic and the conversation when it came to the CI was maximizing your critical illness to, help with your retirement savings, et cetera. But I think that this is part of it too. I don't have children, but anyone who has children here know that the moment your child is sick, I think the first thing you do is you're going home to take care of your sick child. So, let's have a conversation about children. Let's look at protecting the kids. I think the conversation of putting in life insurance and critical illness for children has become more prevalent than it once was. But, let's talk about it. So with kids, they can be expensive. You got diapers when they're babies, baby food, baby wipes, putting in an RESP for their education. And then as they get older, then, they're talking about fashion, style, cool shoes, sports, all those other extracurricular activities. So, there's definitely some added expenses when it comes to kids. Actually, Beneva just put it in a very interesting article about insuring the whole family, including children. So I will share that when I do send up the follow-up for my presentation. Kind of interesting article. It's pretty basic, but maybe if you want to share that, if you have a blog or a website, you want to send it to some of your clients or whatever it is, take a look at it. I think it's pretty interesting. It really talks about the kind of basics of like why you want to cover children. So that could be something handy. But let's look at something as far as an idea of being able to cover for kids. Because like I mentioned that if your children are sick, typically the first thing happens is parent runs home, take care of the kids. Can you imagine? Oh, actually, I shouldn't say that. What if something super unfortunate happens and your child does suffer critical illness? You're taking time off work. You're going to spend lots of time being able to take your kids to the hospital, all the tests, all the doctor's appointment, etc. Very unfortunate. However, when it comes to things such as this, is like you can put something in place, knock on wood, hopefully nothing ever happens, because you can look at it as a twofold situation. Is if something super unfortunate happens, you have something in place. And then that way you can take your time to deal with whatever's happening. However, on a more positive note, is nothing ever happens, you put a plan in place for them to be able to have something as a jumping off point. So then as they move forward in their lives, you can set them up from a financial perspective, whether it's life insurance or critical illness. So in this case, I have a 1-year-old. Parents are putting $200 towards their RSP. But again, kind of like that whole Blake example, let's take $50 out of that $200 and put it towards a CI plan. This is specifically the Beneva CI. So T75, which includes return of premium on death. We chose a return of premium on expiry, and then we add an accidental fracture. So this idea I stole from my counterpart in Alberta. And so he put this together as an example, and he put in the accidental fracture mainly because it's kind of an inexpensive option. And also he was talking about his nephew where he's like tornado on 2 feet, always banging things, always hurting himself. So, he thought, well, accidental fracture would be perfect for this child. Also, as children move on and get older, they will be involved in extracurricular activities, whether it's when they're younger or maybe as an adult. Accidental fracture is not necessarily a bad thing to be adding, because what happens is they just put a value on a bone that you break. So if something were to happen, whether, when they get older and they're no longer children, but they're young adults, skiing, snowboarding, sometimes accidents happen. So nice maybe option to really add to it. So it does change the premium to $52, so maybe above that $50 limit. However, if you decide that you don't want to add the accidental fracture, then it brings us down to like $48, $49. But just giving you food for thought as far as the idea of what we're looking at. And then again, looking at the fact that you're adding return of premium, just keep in mind that the cost for the T75 does include an ROPD. And then here we're looking at, the what you have as far as your value when it comes to your return of premium. And then the accidental fracture, like I said, depending on the bone you break, there's a value behind that. And if it's something that's not listed, and if it's any other bone not indicated above, it's $500 is what we're looking at. That's kind of one unit. If you decide you want 2 units, the dollar amount doubles. So this is a 20 pay. So when we're looking at, my little circles are a little crooked. So if we're looking at a 20 pay, you're said and done after 20 years. And then here you can look at that return of premium value. And like I'd mentioned, that return of premium, that policy loan that you can utilize. So right here is where we look at where the value starts, what the value looks like, being able to borrow against that. And again, putting something in place so they have something ahead of time. If something unfortunately happens, then you have that $50,000 that pays out, so you can deal with being able to take time off work and not have to really stress about anything. And I think that is something to have also a conversation about ultimately. You can rephrase it in a different way, but really that's kind of really the message when it comes to putting something together for children. 250,000 is our maximum. T75 is what we look at when it comes to children. Again, with the Beneva CI, whether we're looking at simplified issue or this juvenile one, we haven't changed our premium in 12 years. We are on the original benchmark definitions. Please take a look at it. We are going through a merger. Pricing wise, I think we'd be very, very competitive. So if you want to introduce and take a look at something for your clients and want to introduce CI, please take a look at it. These are our 28 definitions for the kids. These are our specific cover conditions for children specifically. So information about the underwriting. So this is for SSQ. This would be for La Capitale, now Beneva. Again, not confusing in any way. I'm more than happy to help you out, decipher who's who, what's what, what's going to happen over there. So again, let us know if you have any questions or if you really want to know a little bit more about this CI. This is our BC sales team for the Lower Mainland and the interior. That's me. Matt is my counterpart on the investment side. Stephanie Campbell is our inside. So if you really want to reach out to either one of us if you have any questions about the investment that would be Matt. And for anything to do with insurance related, that would be myself. Again, territories, Lower Mainland, the interior. This is the rest of our sales team. Jeffrey, Mo, and Samir handle Northern BC and Vancouver Island. And then the rest of the team for Alberta South and Alberta North, Saskatchewan, Manitoba. And then our sales team in Ontario as well. So if you don't know who your contact person is for SSQ, soon to be Beneva, let me know, reach out to me. I'd be more than happy to share their contact information. Hopefully I gave you guys a little bit of food for thought as far as how you want to position CI, how you want to take a look at it, what we have to offer, and then being able to, navigate that. And like I said, hopefully the perception of as far as, what you get for objections and whatnot when it comes to CI, I've addressed some of it because I think that we do have enough options to be able to offer something to your clients.